Today I have with me Vishal Jain, who leads Zerodha Fund House, Zerodha's new asset management company. You joined them 3 years ago. How big is the team?
We're about 35 people right now.
Only 35 people managing 5,000 crores.
That's right. In terms of number of people investing in mutual funds is about 5 crore. Retail investors getting into equity was not such an easy game. If you looked at India historically, we've been a socialist economy. Culturally, if you saw us, we were investing in fixed deposits, gold and real estate, things like that.
But there's another argument that only the top 1% of the India is growing. But still in India, people don't understand buying a gold ETF versus buying physical gold. They still prefer physical gold. What is the participation of women in mutual funds?
I think it's about 21% or so.
How do you build your own portfolio personally?
All throughout my life, I've...
Hi, this is Siddharth Aluwalia. Welcome to the Neon Show. I'm your host and also managing partner of Neon Fund. Neon Fund is considered by Economic Times as the second best AI fund in the venture capital category from India. Today I have with me Vishal Jain, who leads Zerodha Fund House, Zerodha's new asset management company. Welcome, Vishal, to the podcast. So excited to have you.
Thanks for inviting me, Siddharth. Pleasure being on your show.
Vishal, Zerodha is a household name in India, right? Especially, the personalities Nikhil and Nitin are, right? Everybody watches them. The Zerodha Asset Management Company is a new entity that you lead and that the group has built. And it's you joined them 3 years ago. And the funds launched publicly 1 year ago, right? So want to focus more today's podcast on the India market, right? And keep it as a discussion on, how is the India's participation in this entire category of mutual funds increasing? Who are the people who are opting for these mutual funds, right? Which people are participating directly in the stock market? How do people prioritize investing directly versus going for mutual funds? So let's start, by the history of mutual funds in India and how many mutual funds are there today in India.
Yeah. So I think, look, the history of mutual funds can be kind of split into maybe 4 or 5 different phases. I think the initial phase was, maybe between 1960s and the 1990s, when we had a single asset management company which was called as the Unit Trust of India.
Sure.
The UTI as it's called today. Somewhere I think in 1998 or something, 1988 or around that time is when the government opened up mutual funds for some public sector banks as well. So you had a couple of public sector banks kind of setting up mutual funds, in India. I think somewhere in 1993 or 1994 is when the market opened up for international players. I think 1992 or 1993 was also when SEBI was incorporated, got set up, and then regulations started coming into the market. So somewhere in the middle of the 90s or so, you saw a lot of these domestic as well as some foreign, asset management companies that came and set up shop in India. And since then, we've now got about, I think about 44 or 45 mutual funds in India. And currently, we manage about 67 to 68 lakh crores, across maybe about 1,500 to 2,000 schemes that are there in the market. Currently, approximate in terms of number of people investing in mutual funds is about 5 crore, 5.1 crore or so at this point of time. Those are the number of people who are holding unique PAN folios, as we call it in the mutual fund industry. The mutual fund industry has gone through a lot of, I would say, change in the last 2 to 2.5 decades or so. If you look at the time in the middle of the 90s when the new asset management companies started coming in, you will remember that one after another there were quite a bit of global events that happened. Right from the Korean crisis to Y2K to Iraq war and things like that. So a lot of influence at that point of time, came in and volatility in the markets, resulted in traction being kind of slow in the initial part of the first about, 5 to 10 years of the industry. The focus had been in most cases, on the institutional side because retail investors getting into equity was not such an easy game. If you looked at India historically, we've been a socialist economy. We've primarily been an economy which has been led by a lot of public sector companies, and culturally, if you saw us, we were investing in fixed deposits, gold, and things like that.
Real estate.
Right, real estate. And therefore, I think, we didn't have a natural tendency towards investing in products like mutual funds at that point of time. We also have to remember that any kind of asset management business is all about trust. And therefore, you need to be in there for a couple of years for people to start trusting the entire process and the products that you have. So I think the initial phase was when a lot of focus came into debt products. Debt products, I think, on the shorter end of the curve, which means, products which are possibly which had a maturity of 3 months to 6 months, less than 1 year or so. A lot of retail, not retail, a lot of institutional participation started coming in there. Retail investors started coming into the market once, the SIP kind of started becoming very popular. In terms of a simple way, small ticket amounts to start investing, month after month. So that, I think, started off maybe from the middle of the 2000s or so, and now it's become a way for people to invest in. So it's become a popular term. SIP, in a sense, has become popular not only in India but even globally. Keeping in mind that today approximately about 25,000 crores of SIPs are happening month on month in the industry. So retail investors have kind of taken on to SIPs now, and SIPs are primarily happening on the equity side. So you'll find that a lot of people now believe in the India growth story, are investing through equity funds in India. So that's a very heartening development that has happened. One of the things that India also, I would say, was in the forefront was a product that I believe in a lot and have been involved in and have been associated, since the time of launch, which have been ETFs and index funds. ETFs, the first bunch of ETFs, I think, were launched in the US maybe by the middle of the 90s or so. We launched the first ETF in our erstwhile...
Just for our audience, what are ETFs for people who are coming to learn more about?
So ETFs are basically mutual fund units, in a very simple sense, but trade at a real-time price on the stock exchange.
Okay.
Right. So there are 3 different structures in a mutual fund. Earlier, you had something called as a close-ended scheme. A close-ended scheme was basically a scheme where an asset management company came out to the public, with a product which it invited funds, had a certain philosophy, whether it was investing in equity or debt, and had a certain maturity, which means that after that, whatever, if the product was for 5 years or 10 years, after the 5 or 10 years, the money would come back to you in terms of whatever the NAV was. But the issue with that kind of a structure was that if you had to get out in between, that kind of became problematic. And therefore, then those units got listed on the stock exchange. But even if they were listed on the stock exchange, they were never trading at fair value. So you'd find that they'd be trading at a discount simply because of the fact that the guy who's going out to the stock exchange is basically the seller who wants to get out.
Yeah.
Right. So these units would eventually trade at a huge discount in the stock exchange. And therefore, if somebody wanted to get out in between, it wasn't the best product for you to kind of use. The next phase of products which came out was the open-ended funds globally, where you could get in and get out at a closing NAV of the scheme. And those funds are now, very popular across the world and in India as well. And the third structure, which is what we term as actually the innovation that has happened in the mutual fund industry, which is the ETFs, which is the exchange traded funds, where you can actually buy and sell real time on the stock exchange all throughout the trading hours that are there. So you can actually get in and get out, just like a stock in an exchange traded fund, but it's backed by an entire basket of scripts that are there, underlying that particular index. So the first ETF got launched in India in 2001. So in that sense, India was in the forefront of technology of, keeping in mind that such kind of products had just got launched only 6-7 years before we actually got that to India. Again, the initial phase of exchange traded funds were they were slow to pick up, but somewhere in the middle of, I think 2015 is when, again, institutional participation started. And EPFO started investing money into ETFs. And
What is EPF?
EPFO is the Employee Provident Fund, where whatever salary gets our salary gets cut goes to the EPFO for managing. That organization, which is run by the government, now puts in nearly about 15% of their incremental corpus into ETFs.
Okay.
So a large flow of money, assets are coming from the EPFO. Since 2018 or so, we found a good amount of traction coming into index fund from retail investors and HNIs. And during COVID time and post-COVID, because of the sharp spurt in demat accounts and the kind of volatility that was there in the markets, we've seen a huge take towards ETFs as well.
And why did COVID resulted in more participation in mutual fund and ETFs?
Simply because of the fact that, I mean, two or three things. One is that I think people were home, and therefore I think trading activity in a sense increased. It became easy for people to open demat accounts because most of it was kind of being done online electronically. Also, markets, if you remember, had fallen nearly 25-30%, and generally when, say, broad indices fall at that level, you generally find a lot of new investors who were kind of fence sitters in the market coming in and starting to invest. Right. So I think that happened, and you saw a huge expansion in the number of people investing in ETFs at that point of time. And one of the reasons why ETF became a kind of first port of call is when you have an event, something like a COVID that happens, you don't know which stock or sector is going to get affected or is going to do well.
So you just buy the index.
But it's like I keep telling people it's like today, if you go to a shop and you want to buy something and you're able to get it at 25-30% discount, you generally just tend to, buy it because you're getting it at a discount. So at that point of time, a lot of people who were fence sitters thought that, look, I was buying at 100 rupees, but now I'm getting it at $75. Right. So a lot of people kind of got into the market at that point of time, and ETFs kind of became a first.
And do you think the markets are down right now at a similar level or not so much?
Very difficult to say, Siddharth, because generally when you invest, it's better to. It depends on what you're investing for, right? Typically, you should have a longer term outlook towards any kind of investment because it's very difficult to tell where the market is going to go in the short term. And India being a growth economy, I think it makes sense to think long term than to try and predict.
I was just asking from the point of view that in 2020 March the markets fell by 25%. Right now also there is some volatility in the markets. The markets are down, but the overall Indian macro globally is very high. Right, so it's a good point of time, exactly like 2020, for folks to enter more ETFs, more mutual funds.
Definitely, and it's already happening. So, keeping in mind that there is a correction in the markets, and keeping in mind, as you said, that the correction has been more due to events which, to an extent, have been India related, but a lot global related. I mean, it does make sense for people to, if they're doing their SIPs, to kind of step up their SIPs and start investing a little more. In say mutual funds, keeping in mind that the next 4 to 5 years, India is going to keep growing.
Yeah, and just before we discuss more into what's going on in India, would love to know how do you build your own portfolio personally?
I mean, all throughout my life, I've banked a lot on ETFs. So typically, I tend to split my portfolio in something called as a core and satellite. Core is something which is what you term as a major part of your portfolio, which is the fact that you want to invest in the equity market. And why do you want to invest in the equity market? Because you believe in the India growth story and you want to beat inflation, right? So I usually take most of my core exposure through low-cost diversified ETFs, which could be in the large cap segment, mid cap segments.
Or you would buy something like top 50.
Something like a top 100 or a mid cap 150, mix my portfolio, with these ETFs. I usually have gold in my portfolio. because if you look at gold as an asset class, and I take exposure through gold ETFs, if you look at gold as an asset class, it's kind of has a negative to low correlation with the equity markets, and the day you include gold into your portfolio, it kind of cushions your portfolio to an extent, because if there is any untoward event that happens in the global economy or in the domestic economy, gold is something that kind of shoots up at that point of time and kind of saves your portfolio.
And gold has been growing, let's say, approximately more than 10% year on year.
Yeah, so the returns have been decent, but nonetheless, I think it's more important for you to diversify your portfolio across asset classes. Satellite portion of my portfolio could be sometimes, I can look at doing maybe stocks or any kind of other products which I believe can, at that point of time, may give a little higher return than, say, a broad-based, plain vanilla index. So that's how I usually split my portfolio.
And what about real estate in terms of the portfolio?
I mean, real estate, fortunately or unfortunately for all of us, becomes a very large part, of our portfolio. But it's more for consumption than I'd say for investment. Yeah.
Understood. And, if you can tell historically, how has the retail participation in stock markets and mutual funds increased in India over a period of decades?
I mean, retail participation obviously has shot up manifold over the years. And I think that's been led more by, the fact that there is easy access for you to open accounts and to access the stock market. I think that trend kind of started off maybe in the mid-90s when NSE came about and electronic trading kind of started. And therefore, it led to, far more transparency and ease of trading than you kind of calling up a broker, placing an order. You didn't know what price it was happening at. You got some contract note which came in the evening. You didn't even know what, so it was at that point of time, I mean, I think mid-1990s, it was very opaque. And I think that transparency led to a lot more investors, coming into the market. And that has kept increasing, over the past, few years. I mean, I don't know the latest numbers, but I think demat accounts now are at 13 or 14 crores or something like that.
Okay.
Right. So participation has been quite healthy from retail investors. On the mutual fund side, again, retail investors coming into mutual funds has been a little slow, but is now kind of gaining pace.
So
as I said,
there are 13 to 14 crores, which is like 130 million retail investors in India out of the 150, like say 1.5 billion population,
right,
or 1500 million
right,
population, which is almost like 10%.
Yeah.
And out of that, only 5 crore or 50 million have mutual funds,
right,
which is 1/3 of the retail. Why do you think so? It's like the education, though there are so many ads on mutual funds and all this, mutual funds are less exciting for retail investors, or people directly like to do stocks? What do you think? 1/3 is quite a low number.
Yeah, so I think I think it's a lot. I think what you're saying is a combination of a lot of factors that are there. But if you look at what is happening, I think we have to look at things in perspective as well. I think there is a lot of growth kind of happening in the last couple of years. So the industry is kind of adding nearly about 1 crore new investors every year into mutual funds. So that traction is kind of happening now.
And how much is the industry adding in terms of the direct exposure to stock market every year?
Direct industry adding in terms of direct exposure?
Yeah, let's say there are 13 crore people who have a stock brokerage account. So how much of that is growing every year?
I mean, that is difficult to say. But on the mutual fund side, I'm saying that on the mutual fund side, there are something like about 1 crore new investors who are taking to mutual funds every year.
Almost 20% every year.
Yeah. So if you look at, I mean, again, if you look at India historically, culturally, we always, were kind of tending towards fixed deposits, towards real estate. And I think that is slowly changing. And I think over the years, because of the fact that, mutual funds have given a decent amount of returns, because the markets also have done well, because as a country and as an economy also we've done well, I think that faith is coming into investors. And I think that is what is leading to overall growth. And I believe that as we go ahead with ease, with you being able to open accounts much more easily, with you being able to invest much more easily through a lot of these digital and electronic platforms that are there, with education and financial literacy increasing, I think this number will kind of see that hockey stick curve in the next couple of years, where a lot more people will start coming into financial products like mutual funds in a big way, in the coming years. Yeah.
Do you think we are not very far away when we'll see roughly 20 crore, 15 to 20 crore people having a mutual fund?
I mean, for me, it's actually a personal aspiration. And that's one of the things that, also led me on to, kind of be part of this venture. One of the reasons being that there is a huge population out there that still needs to be tapped. Because if you look at, any kind of numbers, in the economy, there are about 15 crore guys who've kind of linked their Aadhars with PAN, right? So there are a huge number of people out there who are there to be tapped. And our belief is that creating the right kind of products, making products simple, making the journey much better for investors will lead to more and more people kind of coming into mutual funds and kind of using financial products to achieve their, life goals. Yeah.
And one thing that I wanted to ask is the penetration of food delivery, OTT. Is it increasing directly in proportion to the increase of mutual fund investors in India, or there is no correlation between them?
I mean, I would say it's difficult to compare, Siddharth. Remember one thing: OTT is instant gratification, right? Whereas any kind of investment that you do, you need to make a long-term commitment, and it's got its own bit of risk that is there associated with it, right? So not the right, I think, to compare in terms of should you compare OTT with, growth in OTT with, say, growth in mutual funds. But I think it's important as, leaders for us to understand the kind of journey and the kind of investor behavior that has led to this sharp, increase in OTT users, over the years. And that's something that we have to learn from and see how we can use those learnings to ensure that more and more people are kind of able to enter the stock markets. I mean, enter mutual funds. Yeah.
And one thing is that there are so many fund houses, right? And the number of fund houses are growing. Like you mentioned, 44 right now. Is there a space for everyone to grow? Like the market is growing so fast?
I think so, Siddharth, because the number of people that are out there to be tapped is huge. And the more people, who come into the market in terms of asset management companies, the more we'll be able to reach out to more and more people, as an industry. Yeah. So I think the space is still there for a lot more players to come in. I think, again, as I said, my personal aspiration being that we should be able to increase the width of the number of the people that we're kind of tapping. And as long as you have more and more, AMCs coming, trying to ensure that, we're able to reach out to more and more people, I think that's a win-win for everyone, I think.
But there's another argument that only the top 1% of the India is growing, which is leading to, most of these 10-minute delivery apps focusing on the tier 1 consumer in India. Like the tier 3 in India is getting digitized, but not growing in fast enough, their income, their wealth.
Sure. But I think, we need to look at the country, say, in the next 10 years, 20 years. There are a lot of data points that are kind of eye-opening, and I try and learn a lot from these data points. One of the things that I also keep talking about is these Jan Dhan accounts that, that the government has opened. So these were basically free accounts that the government has opened for nearly, at this point of time, I understand that something like 52, 53 crore accounts have been opened all across India. And a lot of these guys have been guys from the hinterland, I would tend to think. it's surprising to note that on an aggregate, something like there is about 2.5 lakh crore being saved in these accounts, across these, 52, 53 crore accounts, right? And the amount that is, kind of lying as balance in these bank accounts is increasing year after year, right? So it just goes to show that, the day you kind of introduce a financial product to people, and they kind of figure out a way to start saving money and find that, look, the money is also growing in that particular place, I think people kind of start using it. So it's a matter of, one is the industry reaching out to these people, and also we need to understand that India is such a large country that there are so many more countries inside India, right? Whether it may be every state being different, culturally or whatever you may say, but even when we look at kind of in terms of per capita income, I understand that there was a report which came out by Bloom Ventures, right, where they spoke about India 1, India 2, and India 3, where India 1 is approximately about, I think, 12 crore people, or 120 million people or so, and their per capita income looks like a Mexico, right? And you have an India 2, which has got, I think, some 35 crore people or so, 350 million people or so in that, and that kind of has a per capita income of about an Indonesia, in that sense. So when you look at it, I mean, whatever number you look at, there are about 400 to 500 people, 400 to 500 million people who we believe, financial products can be introduced to. And I think we need to first reach out to those bunch of people, and then see how we can kind of then spread that word across, in
So
the
I
country.
believe anybody who has a stockbroking account, only these are the people who would have a mutual fund account. It's not like people have a mutual fund and they are not using, let's say, any stockbroking account.
It's not necessary. I mean, any person who has a stockbroking account, as a person generally would have a demat account, but any mutual fund can be opened even without a demat account.
But I agree
Right.
with you. But I'm saying usually the tendency is to first start trading on stocks and then go to mutual fund, or you have seen independent behavior also. Like
There is independent behavior as well. Therefore, any product that we launch, right, we always launch it kind of in both platforms, where it would be like, for example, our gold ETF is an ETF which is listed and trades on the stock exchange, but we also have a gold fund of funds. So in case you don't have a demat account or a broking account, you can invest in a gold-backed mutual fund unit, through a gold fund of fund. Yeah.
Okay. But still in India, people don't understand buying a gold ETF versus buying physical gold. They still prefer physical gold. Why is that over a gold ETF?
I mean, again, Siddharth, it is cultural, yeah.
But
But
there historical
it's changing.
difference in returns? Or no?
No, I mean, a gold ETF, in my opinion, would be far more efficient, because when you look at the physicality of gold, right, there is so many pain points, right from the quality of the gold to purity to you pay making charges, and there is no transparency in terms of pricing of gold. You'll go to 5 different shops, you'll get 5 different prices, right? So that's not the case with, say, a regulated product like a gold ETF, right, where the AMC is disseminating a real-time NAV through which you can see what is the kind of fair value of that product, and based on the fair value of that product, you know what you're buying and selling at, right? So it's a far more transparent product. If you look at what is happening, say, in the last year or so, since the previous budget in I think it was July 24, where gold ETF taxation was brought on par with equity taxation, right? There's been a huge jump in number of investors now moving towards gold ETFs over the last year or so, and I believe that trend will keep increasing as we move ahead. Yeah.
Got it. What is the participation of women in mutual funds?
So at this point of time, I think it's about 21% or so. So approximately about 21% of the assets under management on the retail side are, I think, owned by women.
And let's say if you have to divide by age the participation of these 5 crore mutual fund holders, what would be the rough participation age-wise?
Yeah, I think the largest population would be between 35 to 55. I would tend to think.
Okay. And where are these every year 1 crore new investors in mutual fund coming from? Are they coming from, say, tier 1 India, tier 2 India, tier 3 India?
So it's coming from across. But I would tend to think that it's coming now more from the younger age group between 25 to 35. But because of the fact that in the last decade or so, there has been a concerted effort by the industry to target tier 2 and tier 3 cities, there is a decent chunk of folios and AUM coming from there now.
And would you have this data on the 5 crore mutual fund holders? Their geographic splits across north, south, east, west, which are the states which are maximum?
So I think maybe about 50-60% of that comes from Mumbai.
Okay, 50-60% of that comes from Mumbai.
From Mumbai,
like 2.5 crores.
Yeah, so a lot of it. Mumbai is a large base for not only for institutions but also for HNIs and retail. I think the second largest is Delhi, which would be about maybe about 15 to 20%. The third would be Bangalore, which would be between 8 to 10%, and then the rest of it is the rest of the country. Yeah. So these three centers, would account for nearly about 80-85% of all flows that come in. Yeah.
And Mumbai is because being the financial capital of the country?
That's right. So a lot of this data also is tilted towards Mumbai because a lot of institutional money that comes in, it comes in through Mumbai because most of the large financial institutions are there as well.
But retail has no link to the institutional money coming in, right?
That's right. So you're asking me where the split of retail money is?
Yeah, the split of these 5 crore retail mutual fund holders.
I don't have that data with me, Siddharth, really.
But I assume, as you are right, like most of it comes from between Maharashtra and Gujarat.
Yeah. A large part of it would be Maharashtra, Gujarat, and Karnataka in that sense.
Yeah. And you mentioned a very interesting fact that 15 crore people or 150 million people have their PAN linked with Aadhaar.
Yeah.
Right? Is this number recently gone up? Like because I assume to open a mutual fund or demat account, you definitely need a PAN. You can't do it without a PAN card. So somebody from village who doesn't have a PAN cannot participate in this industry.
Yeah. So I don't know if the if that number has gone up recently, but I think that there was a rule, right? There was a diktat by the regulators and the government saying that you need to kind of link your PAN with Aadhaar. And I think that's when the data came out that there are approximately about 50-51 crore people who've actually linked their PANs with Aadhaar. So that's the number of people who actually have PAN numbers in the country.
Yeah. But this is very fascinating data on how India behaves in terms of financial products, right? I think most of it, I assume, would be behavior driven in the last 10 years.
Right.
Since opening a online demat account became much easier, UPI got started. Because of Jio, the spread of mobile internet in hinterlands became very popular.
No, definitely. I think Aadhaar, UPI, I think these have been trigger points for the Indian economy. And now also, getting your eKYC done online, right? I mean, all these, 2 or 3 things have led to a huge amount of traction coming in and ease basically for investors to kind of start investing in any kind of financial product. So definitely the last decade has seen a huge jump in the number of people, using financial products.
And this is just 1 decade old. I can't imagine if this phenomena continues over 3-4 decades.
No, definitely. I think the next, decade or 2 we're going to see a huge jump, and we're going to see that hockey stick curve where you'll see a huge number of people kind of entering the markets as well as, or using financial products to achieve their goals. I think one of the big changes, one of the things that is going to change the way you invest as an investor as you move ahead is going to be AI, right? The fact that, if AI is able to kind of converse or help us converse in, say, a vernacular medium, or be able to kind of customize conversations, I think that's going to lead to a huge jump in not only education or the way you deal with customers, or the scale at which you can deal with customers is going to kind of gallop as you move ahead in the coming years. And I think that itself will lead to a lot more new people coming into financial products in the next decade or two.
So what I imagine in the next 10-15 years is AI will make the user interface so simple that you wouldn't have to use so many apps across so many ecosystems, which involve a lot of learning curve for, let's say, people sitting in like the corners of India. And once it becomes vernacular, like for example, if you type in chat GPT, it's almost today speaks like a human.
Yeah.
And understands you like a human, or even better than a human.
Yeah.
So once that understanding and vernacularity goes to
no, and I think
in India,
I totally agree with you, because for a country like ours, that's needed. I mean, how do you reach out to 50 crore more people?
Yeah.
Right. We have our own set of challenges simply because of the scale that we're talking of.
So I think first the mobile penetration is there. Second is the mobile internet access is there. The third is access to online eKYC, PAN, all this there. The fourth biggest interface is going to be AI will become the user interface to these users.
No, I completely agree with you.
Understanding them, their context.
Yeah, and that's one thing that is going to help us grow very fast.
So at Zerodha AMC, do you have a tech team working on anything which is core AI right now?
I mean, we are sporadically using AI at this point of time for a lot of things that we're doing. We're possibly the only AMC where 50% of our staff is just engineers.
How big is the team?
We're about 35 people right now.
Only 35 people managing 5,000 crores.
That's right. And we're a completely digital and tech-based
18
AMC.
people on the tech side.
That's right. So we have a huge tech team.
What do they do? Like, because you are not launching digital products.
So we're building a backbone within the organization, a tech backbone, through which whatever it may be, whether it's fund management or operations or customer service, is all done in-house, by the team. And so a lot of products and features are being built in-house, to ensure that whether it is customer service, there is a kind of standardized, I would say, interface or communication that is going out to investors, and also from the fund management side, right? The way we see the organization is that we're trying to, give to customers a cost-effective product, right? And for me to give investors the cost benefit, until I don't build infrastructure behind it which is cost-effective, I won't be able to pass on those benefits to the end investor, right? And therefore, we're building that tech backbone such that as we build scale, right, we're not incrementally adding too much cost within the organization, so that we're able to ensure that each and every product that we launch is kind of cost effective for the end investor.
Yeah. One thing that I often think about is that how do you explain to people listening on a podcast the various products very simplicity, let's say sitting inside Zerodha AMC, by their risk profile as well as their IRRs?
Again, not an easy conversation to have, Siddharth, keeping in mind that that you have so many different asset classes.
But if you take a stab at it, how would you do it?
I mean, for me, the first thing is you want to invest in the India growth story, right? And the best way for you to do it is through equity, right? The reason why we've chosen the passive route as an organization is because it's very easy to understand, right?
And what do you mean difference between active and passive?
I mean, basically an active fund is a fund where you have a fund manager, and the fund manager basically you believe that he has some skill or some expertise or some knowledge through which he's able to outperform the market, right?
But he's able to change assets actively. But
assets, or if it's within, say, a equity mutual fund, he's able to move across sectors and stocks based on information and knowledge or his gut feel in that sense. Whereas a passive product is based on an index, right? Where if you have, like, say, the top 100 index, all you're doing is tracking that fund. Right. So it becomes very simple. If I came and told you that, look, Siddharth, if you want to invest in the India growth story, this is the top 100 fund. I don't need to tell you anything more than that.
Well, thank you so much, Vishal. This has been very informative.
No, thanks for inviting me, Siddharth. Pleasure to be here.
It's been a pleasure to discuss, the history of mutual funds with you. How is India participation increasing, and what is India growth story like? One thing is that besides being emotional, what are the data points that you feel bullish about India for the next 25 years, personally or professionally?
I mean, I'm very excited about the level of participation that I see will happen in the coming years in mutual funds. If you look at simple data, where you track assets under management versus, say, a GDP of a country. When you look at developed markets, I mean, not right for us to compare with developed markets right now, but I'm saying that to me seems to be the logical path that India will move towards in the next 2 to 3 decades. Today, if you look at the US economy, nearly, there is a 1:1 ratio in terms of assets that they manage versus the size of the economy. As I understand, the assets under management in the US is approximately about 22 trillion or so. And that approximately is the size of the economy.
28 trillion.
Yeah. So, that's...
and what's the case with India?
In India, it's just 17% at this point of time. We have an economy which is approximately about 4 trillion or so, as I understand. And about 800 billion is the AUM that we manage. Is the entire mutual fund assets that we manage, right? As an industry.
So you're saying it can catch up by five more
I mean,
X or 6?
Imagine in the next, in the next, maybe 10 years, you'd possibly double your economy. So you'd be at a $10 trillion economy, right? And even I'm saying if by that time you're able to hit a 35 to 40% number in terms of assets under management, you're still talking about, growing 3 to 4 times from here in the next, decade or so. So to me, a lot more is there to come. And I hope more and more investors start using, these financial products, especially mutual funds, to achieve their financial goals. Yeah.
Yeah. But don't you think usually people are earning 13 to 14% in mutual funds on an average, on the best case scenario? There are products where people are earning 20, 21% also.
I mean, Siddharth, look, no return comes without its own bit of risk, right?
Yeah.
So, I mean, I think you need to, all of us need to be kind of sane about, things like this. Today, if, say, the stock market is giving you 12, 13% return, the day you try and aim for a 22, 23% return, you're actually trying to be rash. And then it's, it's just, I mean, people have to be aware that they're taking that additional risk in the markets. Yeah.
So thank you so much, Vishal, again. And it's been a pleasure.
Same here. Thanks a lot for inviting me, Siddharth.
Disclaimer. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.